Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia, and this evening once again I'm joined by my brother Brian and partner at As Good as Gold.
Thank you, Darryl.
And tonight we have a very special guest, Brian.
Absolutely.
An absolute icon in the precious metals and financial space. I speak of none other, of course, than Bill Holter from jsmindset.com. Good evening, Bill.
Good evening, Bill.
Thanks for having me back.
Oh, an absolute pleasure. I said it last time, Bill, and I'll say it again. You warned us, and you were pretty close to the mark. Last time we spoke, I believe the economy was holding on to the edge of a cliff, holding on by its fingernails. But now it's well and truly lost its grip, and we're in free fall. No V-shaped recovery. I don't think so, Brian.
No.
In fact, that's long past. And governments, interestingly enough, keep telling us that they're not out of ammunition. They've got a very big toolbox. But the way I read it, and maybe I'm not reading it correctly, but the way I see it, they've only got two tools. And Bill may correct me here, but I see them as their ability to manipulate interest rates and a printing press. A really important point, I think here, Bill, according to our Prime Minister, Scott Morrison, this was just a few days ago, he was talking about the global economy and Australia's economy, and he said the global economy is expected to shrink by around 4.5% this calendar year. He said, just to draw a comparison, during the GFC, the global economy shrank about 0.1%. Now, that's an expectation of 45 times the impact
Of the world financial crisis.
versus what we experienced in the GFC. Now, I guess my question to Bill here is this. That seems almost impossible to interpret. I can't quite get my head around that because I know the GFC had a huge impact in the United States, and it did here too. I mean, those who were invested, of course, superannuation funds lost half their value. It was a disaster. And yet this time we're looking from our own Prime Minister saying it could be 45 times more dramatic, more drastic. How do you get your head around that, Bill? What can we really expect to see coming? Because this isn't going to be a short-term thing, and there's not going to be a short-term fix.
Well, first off, the toolbox may be very big, but there's really only one tool in it, and that's printing money by creating debt. They can't lower interest rates any further. The only thing they can do is prevent interest rates from going up. If rates go up even 1 percentage point, it implodes the debt that's outstanding. Now, as far as a shrinkage of 4.5%, I think that's a completely bogus number. I think the global GDP will be down at least 10%. I mean, people aren't flying; they're not going to hotels. Restaurants all over the world have closed, and they're not temporary closures; they're permanent closures. So you're not going to get the bounce back. The only thing that we've gotten a bounce back on are equity markets, and that's strictly a function of the central banks printing new cash and pumping that into the system, and it had to find a place, and equities are the place. So I think that 4.5% number is bogus. As are the inflation numbers. I think inflation's much higher, as are the unemployment numbers. I think in the U.S., unemployment is probably, if you look at John Williams' numbers, I think even before the pandemic, unemployment was hovering around 20%. I think the number now is 30% plus, because you have the original unemployment plus whatever is shut down from the pandemic.
So how bad is this going to get? That's really the question. I mean, as I said, the GFC was nasty, but what we're predicting here is something far more severe. So how bad can that get?
Uh, in my opinion, what you've seen so far is the markets have been papered over. So while the real economy has slowed, you've got the equity markets and including the credit markets, because low interest rates mean high bond prices. The markets have been papered over. It's my opinion that you are going to see a global debt implosion. And when that happens, and I've talked about this for quite a few years now, that once debt becomes restricted, then you're going to have a problem with distribution. So when debt gets restricted, you're going to see a banking crisis, you're going to see currency crisis all over the world, and you're going to see a problem with distribution, because getting wheat from a farm all the way to a grocery store into a loaf of bread, there's, I don't know, 5, 6, 7 or more uses of credit to get that loaf of bread to the store. Not to mention, most people use a debit card or a credit card or whatever, some type of card to make their purchase. So if you got banks in trouble and banks closing, and it's right in front of us. I mean, all you have to do is look at the amount of derivatives outstanding and how thinly capitalized the banking system is. You've got a major credit implosion dead ahead. And that's going to affect distribution, meaning you're going to go to the grocery store, if it's even open, and not find many goods. And Walmarts and things like that. The real economy will then truly be affected by the financial markets.
What I find here, Bill, and I don't know if it's the same in the United States, but mainstream media over here continually talk down debt. And the ramifications from carrying too much debt. We keep getting compared to other countries. I'll say, well, our debt is nowhere near as severe as it is in many countries around the world. Well, I don't think it's a fair comparison. I mean, everyone's carrying huge debt at the moment. Our Prime Minister again suggested that by the year 2023, we will have 23-24, we'll have $1 trillion debt. Now, I know that's nothing compared to the United States, but what he did say then was that it's going to take, if there are no other issues, so there's no COVID-21 or no other major issue that takes place between now and 2080, it's going to take until 2080 for our kids to pay off this debt. So I've got a 30-year-old son at the moment that is looking at paying this debt off. If there's nothing else in the way, he'll be 90 years of age before the debt's paid off.
The debt will never be paid off. The debt will never be paid off. They're going to implode currencies long before. They're going to implode currencies and dead ahead. And I mean, you're saying your prime minister says there's not a big debt problem in Australia. Look at your real estate market. Your real estate market is a debt bubble.
I guess once again, Bill, here's what intrigues me. We constantly get this, look, interest rates are really low at the moment, so the debt isn't a serious consideration. If it was running at 7 or 8%, then boy, we'd have a problem on our hands. But, I'm saying, well, forget about the interest rates at the moment. What about the principal? Everyone tends to forget about that, don't they?
Right. Well, that was my point. You've taken on, and I mean, it's all over the world. It's not just Australia.
Of course.
Just looking at the amount of debt outstanding, and like you said, it's at 0% interest. So it was payable, but now you've got the real economy shrinking, which creates less cash flow, which makes the debt, even with 0% interest rates, much, much harder to pay. And then you have the problem of defaulting debt, and those properties, those assets, whatever, coming onto the marketplace. Then you have the collateral shrinking. So the collateral underlying the debt shrinks in value, and basically it's a giant margin call.
If you look at the 1930s and the depression that was around in the Western world, there's only certain countries that had a depression. And it went for 10 years, from 1929 right through to really the beginning of the Second World War, 1939. How many years, in your opinion, do you think it's going to, even with the manipulation of the things that they can do today, how many years do you think this is going to go on for? And do we have 3 years? Do we have only 1 year left? What's your opinion?
It could be a very long-term event. There's a big difference between now and the 1930s. Back in the 1930s, currency, cash, was basically gold. The world was still on a gold standard. And of course, the U.S. devalued gold in 1933 or 34. It's different today because the world runs on fiat currency. And the fiat currency, when all is said and done, is worthless. So it's a completely different ball game today than it was back then, because the money was real and now the money's fake. Yeah. So that's just one more problem on top of it.
Yeah. So what got us into trouble in the first place? All this, printing of currency and reducing, lowering interest rates, providing incentives for people to spend more, is all we're going to see is more and more of the same, aren't we? So we just get. So what does it take, Bill, to turn it around? What are the decisions that are going to have to be made by someone who's prepared to stand up and get the job done?
Well, you're already 2, 3, 4 years ago. We were called nutcases for using the term reset. And now you see reset in the mainstream media. You see it every day.
Yeah. Yes,
we believe that there's going to be 2 resets. The first reset will be man-made, and you're already seeing the rumblings of that. You're seeing the term all over the place, reset. So there's going to be a man-made reset, and that will basically allow those in power to retain power. And that will fail. And it will fail because, again, you have to have a real currency. And the second reset will, you'll see currencies backed by, not convertible into, but backed by gold. And the second reset will carry with it confidence in the currencies. The first reset will fail because it's man-made, and it'd be basically just a redo of where we are right now. And I don't think the first reset's going to hold much more than 6 months, maybe a year. Then you get the second reset, and that's when the real financial and economic pain hits, because all of these rigged markets are going to go to where they should be.
Yeah, which is why Jim, your partner, of course, constantly talks about becoming your own central bank, I guess, and taking control.
Exactly.
Yeah.
Get your assets out of the system.
Yeah.
Make sure you don't have intermediaries between you and your capital.
Yeah. And there are very few, well, I was going to say very few Australians, I'm saying, I think very few Americans are prepared for this. I mean, I don't know what it is that we'll need to impact people so that they understand what they need to do. I mean...
Hey, I have a question for you. We're hearing here that is it Victoria that's completely locked down, shut down because of COVID?
You're hearing correctly. Stage 4, and there really aren't any genuine signs of it reopening. I mean, they just keep on extending the date all the time.
Yeah, I'm just wondering how the people feel now that they're disarmed, and they can't. The reason for the Second Amendment in the United States is so that people can stand up to an unjust government. And being being told you can't leave your house or whatever. I mean, that's unjust. There are people who are unarmed can't really protest. And I was just curious as to what the thought process is. Are people looking back and saying, gee, I wish I hadn't turned my gun in?
I think you'd be right. I mean, at the moment, they're very angry. Victorians, we feel for Victorians. They are going through incredible hardship. You just imagine, Bill, I spoke to one of our clients the other day and he said, look, I'm just looking at 4 walls. I can't drive any more than 5 kilometres away from my home. I have to wear a mask everywhere I go. I am just so restricted. So, and this has been going on since March. So we're now in 6 months and there is no real indication that these lockdowns are going to be dismantled. So, we've got...
2 days ago, the World Health Organization came out and said that governments or countries should not lock down because of the economic hardships.
Yeah.
And I'm thinking to myself, as soon as I saw that headline, these are the guys that originally called for a shutdown.
Yes. Correct, exactly. And Dan Andrews has taken it to the absolute limit, the Premier of Victoria. But he's the only one who is, in serious lockdown mode and will not budge from that position. But you're right. The rest of the world, even our Prime Minister, is saying, hey, Dan, take it easy. Let's open it up again. Open the state up. But he is adamant at the moment, isn't he? Yeah,
we've got a number of, we have many clients in Victoria now. Victoria is a state of a population of about 4 million. South Australia, where we live, is a population of about 1.5. But all of our clients have said, as soon as this is over, we're coming to South Australia, because we've been run with a dictatorship. We can't go out any more than 5 kilometres, which is about 3.5 miles. If you move out of your house, you've got to have a mask. So there's so many complications, and the true believer of gold and silver and liberalism basically want to get rid of that premier as quickly as possible.
Oh yeah, we're looking at a mass exodus. So many people who want to leave Victoria now and come to live in the other states, which reminds me of a comment that you passed going back not that long ago, and it was with reference to a mass exodus of citizens in your country, in the United States, transferring from cities to suburbs, and those moving from suburbs to regional areas. And I can understand that too, to escape riots, protests, break-ins, hold-ups, all that sort of thing. Do you see that intensifying in the United States, in some of the major cities?
Yeah, absolutely. As a matter of fact, we moved just over 6 months ago. We were in you want to call it a rural suburb, and we moved totally rural. Just at the very beginning of COVID, before the riots, because I viewed it as going to ruin the financial system. And once that's ruined, then you got the distribution problems. And we just looked at it and thought we need to move out. But once the riots started, you're absolutely correct. There has been a mass exodus. I feared I was going to have a hard time selling my house. And we got 3 bids within the first 2 or 3 days of people from the city moving out, and you're seeing it all over the country. And you're also seeing people leave states like California, New York, Illinois, New Jersey. You're seeing people move away to get away from high taxes, to get away from, if you want to call it, authoritarian rule. People are fed up. So yeah, you're seeing this is probably the biggest movement of human life in this country in my lifetime. I was born in 1960, so for the last 60 years, this is the biggest movement ever.
So if people move out of the cities, Bill, what happens to production? I mean, the factories, the businesses that operate within those cities, how are they effective?
Still operate, but the problem is what happens to that real estate? I mean, there's some big, major, 400, 500
Sure.
and larger hotels that are closing down. So what's that property worth? 20 cents on the dollar?
Yeah,
and don't forget, those things weren't purchased with cash in the first place. They were purchased with debt. So somebody's left holding that loss. And that's the problem that I see, is that you're going to see massive decay in the cities just because you've got hotels, restaurants, entertainment, etc., shutting their doors and declaring bankruptcy. But when there's a bankruptcy, somebody loses, and we haven't seen. We're not to that point yet. But once we start to see the somebody loses, that's when you see massive problems in the credit markets. And what that means is, when I say a massive problem in credit markets, that is interest rates going up.
And if you've got that unemployment, you can obviously tell you there's going to be more than a march on the street. There'll be more like a riot on the street for many days in succession. I want to move on. Thanks, Bill. I want to move on, and I just want to bring up a graph that I saw with Mike Maloney of goldsilver.com. And I'll just bring up, I'm going to bring up the question of the next 3 years, but prior to the next 3 years, obviously we've got right now and the last 40 years. Mike Maloney put up a graph of between 1970 and 1980. Now, gold went from $35 an ounce to $870 an ounce, which is 25 times. Then he puts up a graph of 1999 to 2024. Obviously, that's 3 years away, but it's only 3 years. The rest of it is factual pricing of gold. When you put those two graphs together, they align themselves so accurately, it is unbelievable. And when he goes out to 2024, 3 years from this point, it goes from starts at 1999 at $250 an ounce, out to $11,250 an ounce, which is 36 times. So what I'm getting at here, there's a remaining
number's way low.
Yeah, and
1,000 is way low.
You're way low, and I was going to come to that, because even at the figure that he's got, he talks about there's only 3 years left. The remaining gains is 600% or 6 times. And if it took it over the 3 years, there's a remaining yield of 77% per year. And I'm agreeing with you. 11,250 is very light on. So what's your feeling? What can you add to this?
Well, if you do the math, if you take, and I did it back when the number was 21 trillion of debt. When the U.S. had $21 trillion worth of debt, and assuming that we had the 260 million ounces of gold that we say we do, which has not been audited since 1956. So I personally don't assume that we have it, but assuming that we do have the 260 million ounces, the number, if we had to pay our debt off in gold, that gold would have to be valued at $87,000 an ounce. Now, with another $6 trillion, the number's well over $100,000. And I've not seen Mike Maloney's chart, but it's funny you bring that up, because in a conversation, I think it was 2 or 3 weeks back, I was talking with Jim, and he was thinking back to that period, the 1971 to 1980, and his comment was, the last 2 weeks was incredible. I mean, gold went from, I think it was $400 or $500 an ounce up to, or close to 600 up to 875. So it was the last 2 weeks where the spike occurred. And then, of course, the rest is history. Gold collapsed back down to the $400 or $500 range, and then melted ultimately down to about $260 an ounce. We don't think that's going to happen this time. You may see movement like that in the first reset, but the second reset, gold is going to find its true value. In the cash markets, COMEX is strictly paper, and basically it's the tail wagging the dog. We think in the second reset, gold is going to find its true value, which is much, much, much higher. And the $11,000 number is, like I said, I think way too low. But you're not going to see the collapse after the second reset. It's basically going to find a plateau.
That's what some people are afraid of, a collapse. And I agree with you, Bill. The collapse will not happen because you've got all countries around the world in the same position, and you've got people going after, if they can't afford gold, they're going to look at silver as the next best opportunity. So, no, I agree with everything you say.
One other thought, as far as the collapse in gold back in 1980, we had gotten close to the thought process, but we weren't really there. The thought process being, if I sell my gold or sell my silver, what am I going to put it into? And there was not total distrust of currencies at that point. At this point, gold could, let's say gold jumped $1,000 an ounce Monday morning. The thought process that one should go through is, well, if I sell my gold, where am I going to hold that capital that's safe? And there is no place. So that's why, it doesn't matter what the dollar value is. I've said this for years. When all is said and done, people are going to count their wealth in ounces.
Yeah, and I've repeated that a number of times to a lot of our clients. Yeah, which is huge, isn't it? Really?
Yeah, it's exactly right. People are not used to that type of future. Yeah.
No, look, I mean, and the cold hard facts are this, and I've got some numbers here, Bill, and I'd like to share them with you. You're probably aware of these anyway, but top 6 investments for the last 20 years. And I say to people, you need to know this. Mainstream media isn't telling you, but you need to know these numbers. Top 6 investments in the last 20 years. Well, no surprise, really, not to us at least. Gold was the number 1 investment at 423%. It's up 423% over that period. Surprisingly, though, copper up 246%. Iron ore, 236%. Silver runs at number 4 at 230%. Stocks up 224%. They have been measured by the total return of the S&P 500, including reinvesting dividends.
Right.
And then number 6 was bonds up 165%. Gold leads the way. I mean, miles ahead of any of the other 5. And so what I say to people is, do you expect the economy to improve over the next 20 years or deteriorate? And most 99.9% of people say, I expect it to get worse. In which case you could expect to see gold repeat those numbers, bare minimum over the next 20 years. And yet we know mainstream media doesn't report this. We understand why they don't report it. But what is it going to take, Bill, before people get to understand this and recognise how solid an investment gold is, let alone, representing insurance and a safe haven, a total safe haven investment, but providing those numbers? What's it going to take?
Well, that's what I was going to mention while you were listing those 6, is that gold was number 1, but look at it on a risk-adjusted basis. I mean, there's not risk owning gold. Gold is money itself. I mean, it can't, in other words, there's no bankruptcy risk. It can't go bankrupt. The equities can go bankrupt. The bonds obviously can default. So the return on a risk-adjusted basis is even more staggering. What's it going to take? You'll see a financial market wipeout, meltdown, and people find out that what they thought they had by looking at their monthly statement, they didn't have it.
Yeah, look, I mean...
Well, look at a couple of those things, copper and iron ore. I don't know about you, Bill, but I don't really... I'm not motivated not motivated in holding those two in my pocket.
But that's not surprising, because for the last 20 years, and I said this many times, while the West was creating debt to pump financial assets up, China was creating debt, and they were building stuff. They were building infrastructure. So it's not surprising that there was lots of demand for iron ore, lots of demand for copper, because they're used in building. And China built, more infrastructure in 20 years than the U.S. did in 200 years.
Yeah. So they got the economy moving, continuing to move. Unreal.
And when the day is done, the West has got all this debt that's going to default, and the asset prices will collapse. And same thing's going to happen in China. But the difference is the infrastructure in the West is 50 or 100 years old. The infrastructure in China, Asia, is brand new.
Yeah.
So they have something, they end up with something, and basically the West ate their seed corn.
Yes, that's a good way of putting it, Bill. Yes. I'm not quite sure about China. I mean, China's a bit closer to Australia than it is to America, and I think America's got I think it's got the motivation to fight back at China. Australia's got a population of 25 million. I don't like what I see personally. So the more gold and silver that I have, I feel more comfortable. I want to bring in, before we just finish here, I want to bring in what your feeling is with, we hear that the Ohio Police and Fire Super Fund is now changed its portfolio mix and includes, or wants to include, up to 5% gold. Is this something that's happening more and more? Is it just one particular super fund or pension fund that's happening in America?
No, you're seeing that. You're seeing it with pensions across the board. The trustees are now just finally opening their eyes and saying, well, maybe we should have a little bit of gold. The problem is most of them are doing it via paper through GLD and ETFs like that. As this gains momentum, it's going to wipe out the supply of gold and silver, physical metal. And, if nothing else, that will create a run on the metal itself. And these paper exchanges will be exposed for basically not having the metal, not being able to deliver it.
Yeah. It also means that the man on the street, will not be able to get the physical unless he bids a lot higher price.
At some point in time, I think there will be a period of time where you're only going to be able to buy silver with gold or buy gold with silver. I think there will be a point in time where gold and silver are going to go into hiding, and only the very, very foolish will sell their metal for currency, because the currencies across the globe are basically on the path to zero. That's where they're going.
So how far down the track do you think that might be? I mean, you're talking a period of maybe...
It could be any time. No, it could be any time where you could wake up Monday morning and find that. I mean, I don't have a crystal ball, but mathematically, that's where it goes. Yeah. Do we have a massive credit implosion? That'll do it. A stock market implosion? That'll do it. The timing of that is impossible to say, but sure, it could be any time, and I think it's much sooner than later.
Because we're just so vulnerable at the moment. That's the point. Is the world is in a very vulnerable place
because of the way you started this interview with the giant toolbox with only one tool in it. That's why people are going to figure it out. Human emotion is human emotion's a funny thing, and people are going to wake up, and they've been waking up slowly, one by one, but there's going to be a light switch day, and that light switch day, people are going to figure out it's over. I mean, the central banks just printing money. If if in Mother Nature you could print wealth, there would be no poverty. There would never have been poverty. But you can't just print wealth.
No, because you can't print your way out of physically making something. You actually got to put in the hard yards. Yeah.
It sounds good.
Exactly.
Yeah, I know it sounds good. It really does. I mean, if you've got a first home buyer who is looking at the property market and a government says, we'll give you $40,000 up front to help you along the way and you only need a 5% deposit. I mean, it sounds fantastic. I know of a young man just recently who sold some precious metals to his dad. At least that was fortunate. But sold the precious metals. So
Stayed in the family.
Yeah, that's right, exactly. But he did that so that he could gather enough money together. He needed his 5% deposit and then picked up the 40,000 from the Australian government. But they haven't worked it out yet, have they? There is no such thing as a free lunch. Properties in Australia over the next 10 years won't go anywhere. So you're investing in, because of the approach they're using with the stimulus to get people to invest in that manner, those properties aren't going to go anywhere for the next. How good's an economy when you've got to do that? How good is an economy when you have to do that? When you've got to coerce somebody with a $40,000 sum of money to get them across the line?
We're looking down the barrel, Darryl.
We certainly are.
Yeah.
I mean...
you summed it up by saying there is no free lunch.
No.
That's the bottom line. There is no free lunch, and people will find out just that. There's no free lunch, and the markets are frauds.
Yeah, look, I just feel for so many people that just are so underprepared for this. I know that Michael Pinto was speaking with Michael a couple of weeks ago, and he said, look, I'm up to 20% now, 20% of my net worth in precious metals. 20% from 5%. So, he's
going to look back and think that he wishes that he had more than 20%, but that remains to be seen.
Yeah, well, if you talk to somebody like Egon von Greyers, Egon, of course, says, when asked the question, Bill, and you've probably heard him say it anyway, but how much should I put into precious metals? Egon says, whatever you can't afford to lose. And
I've said that for 3 or 4 years. Whatever you don't want to lose,
that's what
put in metal.
Just a quick one. With reference to this reset, let's just come forward just a little bit. Okay, and I know it's really difficult to predict, but because it's such a volatile market and there are changes that are taken, policy changes that take place on a daily basis, so no one really knows where we are except over the long term. But do you have any expectations for precious metals over, say, leading up to Christmas? What do you think we can expect to see between now and Christmas? I mean, a lot of volatility, I'm sure, but what are your expectations?
That's a real tough one. I mean, in the U.S. we have this election coming up. I mean, I'm not even going to venture a guess other than if you don't own metal and what is mathematically coming happens between now and Christmas, well, it's not going to be a very good Christmas for you.
Bill, who's better? Who's better for silver and gold, Biden or Trumpy?
It doesn't matter.
Okay.
Yeah,
it doesn't matter either way because, I mean, either way, the math is the U.S. and the rest of I mean, the U.S. is broke. The U.S. is basically insolvent. They can't open the doors on January 1st without borrowing more money. And that's the same, pretty much throughout the entire world. The doors do not open unless they can continue to borrow more money.
Yes, it's dire, isn't it? And there, as I said, there's no V-shaped recovery here. I mean, this is a long haul. And
we're in dire straits.
Yeah.
It's mathematics.
Yeah, exactly.
It's not. This is no longer, Bill Holter's or anybody else's opinion. This is fact. It's mathematically the debt cannot be paid off. And if that's the case, that means that the currencies are worthless because the currencies are basically backed by debt. So, it's a mathematical equation. And the idea of gold and silver, they are real money. They're not a promise. They're not a future promise. All a 1 ounce gold or silver coin is proof that labor, capital, and equipment have already been used to create that coin. And that's, we could go through the various reasons why gold and silver are money, but they are money themselves. They're physical proof of labor, capital, and equipment already used to create it. Whereas dollars, euros, yen, whatever, are basically promises. And promises are made to be broken.
I think I'd like to conclude this, but I will ask you, before I do this, I'd like to ask you, have you got any closing comments? I don't want to hold you up too long. We know that you've got things to do, and we could talk to you for hours, but our viewers may not be as keen to, I don't know, maybe they would be. But so any closing comments, Bill, on anything that you have in mind that you would love to share with us?
Yeah, basically one thing. If you are a person of faith, may God help us.
Okay, yeah.
Well, that's saying something, isn't it?
It is.
Yeah, I don't know how to comment on that one because it's really what I believe. I agree with you,
That's
Bill.
what it's down to.
That's what it's down to. That's exactly right. Just start looking after your family, have as much precious metal as possible, put some food away, because there are some danger times coming forward.
Scary times ahead, and and I think more and more people are aware of that, but we've got to get across to the masses, and that's not going to be easy.
No.
Michael Pinto, in that interview just recently, Bill, said, what is most important, you must own gold. You must own gold. It isn't a matter of whether you should or you shouldn't anymore. It's an absolute requirement.
One of the things, though. Gold is just one of the things. You must. Gold is just one of the things you must have. The must list is try to become as self-sufficient as you possibly can.
It's that serious, isn't it? Yeah. Okay, look, hey, all we can do is all we can do, and we just spread the word because it needs to be done, for sure. So many people are going to get caught out on this if they don't get the message. Bill, thank you so much. Always appreciate your input. We feel really privileged that you're prepared to put aside the time, as you have on numerous occasions, to support this channel. And coming from somebody like you, it's even more powerful. So what I'd like to do, of course, there's an opportunity here for our viewers and our subscribers to connect with Bill if they would like to do that. Heaven knows why they wouldn't want to do that. An opportunity to connect with somebody like Bill Holter. Bill, how do people do that? How do they connect with jsmindset.com? What do they need to do from here? What's the process?
Well, you can go to, like you said, jsmindset, MINESET.com. We put stuff out pretty much daily. We do some subscriber articles, and we do a weekly call, a recorded call. There's 4 of us that basically talk each Saturday. We record it and post it late Saturday. And when markets are volatile, we've had weeks where we've done 3 or 4 calls for subscribers. So
right.
That's really the best, is just listening to our weekly call, which is roughly an hour each time.
Okay. The opportunity to take advantage of that. I've recognised since I was a kid, and I remember Charlie Tremendous Jones, he would always say, it's all about the people you meet and the books you read. That's where the learning comes from, the people you meet and the books you read. So be selective, but when you've got an opportunity to connect with somebody like Bill Holter, it gives you every opportunity of expanding your life, doesn't it?
No, exactly right. And, if it only takes you an hour a week couple of hours a week of education, and you start to really learn what's happening out there.
So I implore people to do it. Our subscribers, our viewers, take advantage of Bill's offer, because it's an outstanding one and you will be the beneficiary in the process. Bill, thank you so much once again for your time, your input this evening. So very much appreciated. And and to our subscribers, our viewers, of course, that continue to support this channel, to yourselves, stay well, stay focused, and goodbye for now. Thank you so much again, Bill.
Thank you, Bill.
Thank you.
Thank you. My pleasure.